right, so just go over what we did yesterday. This was these two trades were bad. For example, here we had an EU idea where we were in the range, we swept the Tokyo highs, swept the lows, went all the way back up, created a liquidity pool over here with equal highs, 1, 2, 3, liquidity above here, and then price dropped, swept its own lows, swept Asia lows again, right? So it came all the way back down, all the way to this bullish order block. From this bullish order block, we then had a market shift to the upside, a retest of a bullish fair value gap, and we had that again. So we was like, okay, let's buy it. Why? Because we raided lows, we got the fuel, we'd swept liquidity below the next liquidity pool. Since it wasn't this one, I believed, I thought it would be this one with the equal highs. Turns out I was wrong. We got the re-entry. That was it, stop loss, right? Cool. That was minus 1%, minus 1%. Yeah, okay, cool. I made a note of that. So then we had GU. We literally didn't get in here because it was too quick. My account, for some reason, the trade that hit 1%, the stop loss was, I think maybe I said it wrong or didn't enter it properly, whatever his reasoning. Anyway, this ended up messing up my account, so I had to deposit more money into my account. And then from here, we then got a little bit like down here more so, but this was when we analyzed the entry. We had acceptance below this daily low of yesterday's daily low and the London session low. Well, the London daily low is actually up here, but I mean the day before his lows up here, but the London low was here. We had acceptance for about from 1 p.m. to about 2 p.m. and 2 to 3 is our golden hour of entries. And yeah, so there's no Judas swings for us. We had a market the shift on the 5-minute time frame. You can see between from this candle to this candle, there's an imbalance here. Market came up to fill it. We got in, excuse me, in around about here. Then price went down, came back up towards this original entry, and broke this again. Had the market shift to the downside, or not market shift, but low, came back up. We set a stop loss around about to break even when we came to this 4-hour low. This was the external liquidity that we was targeting. So this was a 1 to 4. If we go in at this moment to here, it's 1 to 4. This is a 1 to 9.6. So I was like, okay, cool. I closed most of my trades. You can even see here, I closed 1/5 of my trade, which was a plus 1%. I set my stop loss to here, which is actually break even on my actual account. What this meant was that if it comes up here, we make 1%, which I was fine with. Then I decided to hit a trailing stop loss. This was my original stop loss. Then I moved it after some time to just above this wick here. I was targeting these external lows or liquidity, but I understood that price could just reverse. This could be the external liquidity and it either corrects itself or just reverses from this moment in time. So ended up hitting my stop loss, which was a 4.66. So I set my stop loss to the previous external liquidity. So 4.46 plus this 1%, we made 5.56% yesterday. So if we go from cumulative profit, which is here, 5%, take away 1, that's 4. Take away another, that's 3. Plus 1, that's 4. Plus this 4. We're at 8.86% profit. We can just say total profit. It's easier to understand. Bam. So yeah, we made 8.86% since I think 9th of February. So it's been 9 days. So we made about this amount in almost a week. When risking 1% is very good. For example, if you had £1 million and you're risking 10,000 a trade, you would have made about 80k in a week, which is pretty decent. Something more achievable, 100,000, you're risking 1,000 per trade, would have made 8,800 in a week. 8,000, 100,000. Sorry, that's not bad. Something that's more achievable, or like for most people, 10,000. You're risking £100 per trade. You made 800 and something pounds in a week. With 10,000, that's not bad if you're risking £100 per trade. Now, the goal to make, we want 10k months. That's what my goal is. That's about £500 a trading day. So you do 500 times 5, which is how many days the market's open for. That's 2.5. And you times that by 4, you get your 10,000 a month. And of course, in a year, you just times it by 12. Divided by 2 now, and then times it by 12. It's 120,000 a year. So that's all you have to. We're just 10,000. Was it 10,000? No. Okay, wait. This I could calculate this. If we had the same week we've just had every week, let's see what we would get. So we want 8.86 to equal 500. It should be 1%, and then times it by 100. Doesn't make sense. We want to make 500 a week. About 8.86. This is. Oh no. No, yeah, it is. So 56 is 1%. Hold on. Um, yeah, that's the right number. So we need 5,600 cash to be able to have 10k a month. This is the goal. So if we can raise somehow 5.6, that should be enough to make 10k a month. And that's us with us risking £56, 1%. So £56 a trade. It's 56 times 8.86%, which is what we got in a week. Divide that by 100 because we did it by. That's about almost £500. That's a week though. That's what we want. No. No. Oh, I got it. That's how much I need to make in a day. Right. Okay, so 500 in a day. Okay, I get it now. But in a week, we will need £500 in a day. That's 5. It's 2.5. Divide that by 8.86. Is this amount times this by 100. Okay, so we need this amount. So we need a 28,200 to then make. Okay, cool. And then if we make 8% in the week, we can have 10k months. Okay. That's decent. So we just need to get to 30k cash. Cool. Right. Okay, so this is the plan for today. We are. What I'll do now is I will go through external liquidity on all the 3 pairs we're looking at. We went over. I'll go over why I went into this trade. That we calculated how much we made. Let's go into why those trades made sense. And after that, we'll just probably wait until New York Open, which is an hour and a half. And then from there, we will just monitor the markets. And then, yeah, we'll just chill on the side. Right, so starting off with external liquidity. Like we got our weekly highs, weekly lows done already. We have to change the daily highs. And 4 hour and equal highs up here. In this specific instance, just gonna make it white. Just with equal highs, just to oh wait. She should make it just reduce the opacity to 0. I want equal highs to be here, just so I know it's equal highs as well. Get rid of these liquidity pools over here. Right. So now we can go from daily. So yesterday's daily low. Let's get rid of this. Okay, this is yesterday's daily low right here. This is the daily high. Let's change this around. Okay, daily high, daily low. Right. So we have all the external liquidity. We have, well, not all of them. We have weekly high, weekly low, 4 hour high, 4 hour low, which is also the swing high, swing lows on this 4 hourly. Yeah, we have it all. Right. So let's look at it now on a smaller time frame. So that's all the external liquidity done. So essentially, what we're trying to figure out, we were going over this yesterday, how we are targeting external liquidity. So whenever we have a day of trading, we are looking for which the external liquidity is going to get hit first. So we'll be saying, okay, it's practicing go to this daily high, it's going to go to this daily low, it's going to go to this 4 hour high, it's going to go to these equal highs and 4 hour highs over there. That's how you kind of judge it. Now, we can make these equal highs, for example. I'll need another one before I do that. Okay, perfect. Now we're just determining which one is going to go for. Now we don't know which one is going to go for, but we have to go through some steps. So first thing is obviously to analyze which steps. I mean, where it is. You know, it's like a sat nav. If you're going to a destination, the best way to find out where someone's going or how someone's going to get to somewhere is to find out where they're going. For example, if I know someone's going to France, I know they're going to have to go to Gatwick, Heathrow, or Luton Airport, or an airport, is my point. So I can already position myself at these airports. Obviously, I'm one person, but I may have a team, right? I can say, okay, everyone, let's camp these airports. You have a better chance of catching somebody if you're knowing they're going to France. If I don't know if they're going overseas, or I don't know where they're, and I say hide anywhere in the world, and we both start in the UK, I don't know where they're going to be. It's going to be impossible for me to find them unless I have some clues. The clues is, okay, I'm going to stay in London. Okay, that means we're going to get rid of the northern part of the world, the country. Like we're gonna ignore Newcastle, Manchester, all these places. We're gonna ignore the south, like Brighton, Dover, all these places. We're gonna focus on London only. Now, albeit it's still difficult. You know, if someone says I'm gonna hide anywhere in London, it's still quite difficult. But at least it narrows it down. And the only way you can narrow things down is with information, with clues, right? The more information you get, the better you can get at predicting where to be and where to position yourself in the market. If I know somebody's going overseas, that's probably the easiest clue, the best clue. It narrows it down to me just being at airports. I can find them by being at an airport. Okay, what other information can I get? Where the flights? What flights can they take? They're not going to be at every single terminal, right? Because being in an airport is quite big. You can be in the same airport as someone and not see them. But if I know, okay, they're going to this location, I can look at information of the flights and see which one's going where and what kind of what they call terminals they're going to be at, right? And I position myself. I may not still not find them, but at least I have a very good chance of doing so. And I keep increasing the probability with more information. So what we're doing with these steps is just giving ourselves more clues, more information to position ourselves to find the best opportunity in the markets. It's a bit of a confusing analogy, or it's not so straight. It's not confusing. It's not a straightforward analogy, but I think it does a good job of explaining how you're reducing the you're increasing the percentage of success by increasing and utilizing as much information as possible. Right, so this is EU. Okay, cool. Um, so we've analyzed external liquidity. The next thing to do. So give me a second. Okay. This is EU. Um, Maybe done extended. Okay, this is. Let's go over what we have to do for determining which direction. First, we need to find our destination. Like I used the example of if I know somebody's going overseas and I'm trying to track them down, I know I need to be at the airport. So if I want to find out, okay, this person's going to be at a daily high, I can position myself to only look for buys to this daily high. But I need to first know where you're going because if you're going here, it's going to mean that I have to sell to get here. If you're going here, it means I'm going to have to buy to get there. So just by determining which liquidity, external liquidity we're targeting, I can then determine my position in the market, which is either buy or sell. Okay, so that's why it's important to know your direction first, because where you see how the markets move, you realize that it decides where it's going before it actually gets there. Price is not random. Once you take away that randomness, if price was random, then guess what? Who cares about direction? Because then it's about finding a common theme in that randomness. But once you start to believe that the markets are not random, that there's a reasoning and a reason behind the markets, then you can find that, okay, there's going to be some logic to this. And that logic will be direction, a goal, a target. Excuse me, that aligns with that philosophy. So now that we know that these are external liquidities where price is going, how do we actually determine the direction? So first of all, we then look at the sessions. The sessions are going to be key for us. These gray boxes I have, it's a indicator which you can get through the clicking indicators here. And I don't know which one. I think it's this one I have. So if you type this in, maybe just if you type in session, it should come up. And you just look for Lux Algo. It's in the community one as I see I favorited it. But yeah, that session is going to be key. Now, Asia session, London session, and New York session, especially for certain types of pairs, especially when they include USD, they're going to behave a certain way. Now, every pair is different to an extent, but some of them have a lot of themes. But I'm going to talk to you about EU. So, Asia sessions, I would argue they just provide a range. They provide liquidity, right? Then I'll say London is the manipulation session where we see a lot of buyers and sellers getting trapped. And I'll say New York is our delivery session, which means that price delivers the action towards our liquidity. So we use the Tokyo session and London session as information towards the New York session. Once the New York session opens, we then gather more information from the New York session to finalize whether or not we can execute our entry model, which is a set of rules before we enter a trade. And then, of course, we set our levels according to the rules we have preset already. Okay, so you see how all the models interact. So we're not even thinking about entering the markets yet. So we've analyzed external liquidity. Now we've determined what the sessions mean. Okay, we have liquidity, or rather just a range. Or in London, I'll say is manipulation, and New York is our entry zone, or the delivery, not deliverance, delivery. So what are we looking for? Tokyo. Let's go into the sessions a bit more detail. So Tokyo, we're just looking at it, the range. So the only thing we care about in the Tokyo session, we don't care how much it's moved, where it's moved from to, where it's moved to per se. We just care more so about the range. Okay, that's the most important thing about Tokyo session. The range is just the peak of it and the trough of it. So it's marked out with this indicator, but the top of the box and the bottom of the box. What are we looking for with this? We want to see what London session does. Does it stay within that range? Does it take a range? Does it sweep, come back in? Does it sweep and accept? We're just looking at how London reacts to Tokyo. So what do we notice? So before we get context behind, because that is again information, let's look at these three things. So the Tokyo lows have been taken out. And if you drag it across, you can see that the London session has stayed below pretty much ever since it displaced below around 7 a.m. It stayed below this Tokyo low right here. Right, so this technically goes to a liquidity sweep, which we're going to mark like red. Green is just a liquidity pool, which is where price has not gone to. These are why I mark internal liquidity. Now, internal liquidity is different from external liquidity because external liquidity is larger time frames, or I should say heavier. Rather, let me even give it a better definition. External liquidity is where traders are forced to close their large orders. It's going to have a large amount of orders. Why? Because one, larger time frames, they tend to be larger pips, meaning that people have to put more capital. Second of all, it is where a lot of big players in the markets tend to operate on larger time frames, where there is a lot of stability. And then, of course, the amount of orders itself, because price rarely goes there, there's a lot of people putting their orders around that sort of zone. It's just a grab your attention kind of zone. So that's why that area is a external liquidity. Internal liquidity, however, is within a day's range. I normally see it as either week slash intraday. Internal is generally speaking in between external liquidity. Like it's like technically you can have internal liquidity outside of the daily high. Like for example, there's probably some liquidity over here, right? But for me, I like to. You should only really be focusing on in between anyway, because internal liquidity outside of this is not necessary for us. Because the way we see internal liquidity and external liquidity is like this: external liquidity is our goal, our target, our destination. Internal liquidity is our steps or our footprints to get to that external liquidity. So if our internal liquidity is outside of our external liquidity, it only means that it's no longer a footpath or a footsteps or steps towards our external liquidity because it's outside that range. So we just remove that from our charts anyway. So we don't really include internal liquidity that's outside of the range. Now, if our range for the day is going to be like 4 hour high, we'll determine, okay, price is going to aim for this. Then everything in between where price is at, the 4 hour correspondent low, and we're basically between price and the liquidity, everything else now becomes internal, with the exception of, the explicit daily highs, 4 hour swings, and daily weekly highs, etc. Okay, so we've had the London session, which actually closed below this low here. So London session held below this Tokyo low right here. And had acceptance because we stayed below for multiple candles and we closed the London session below the Tokyo low, right? What does that tell us? That tells us that we have fuel. This is like I said, manipulation, right? So we have fuel to move in a direction. New York is now has a lot of orders accumulated to then push it into a direction of external liquidity. The truth is, you will never know the direction until you get to New York session. So all this is just the prior steps that is required either which way. Okay, next one is that we're waiting for now. Maybe right here. Right here, when the candles start to get to this time, so you can see on this axis time, which is going to be 1:30 p.m. That's when the New York session opens, and we're going to wait for the Judas move. So the Judas move is not explicitly between 1:30 and like 2 o'clock, right? It's not explicitly in that 30-minute or that hour range, but it can happen. It happens between after the London session. It can even happen during, from around the start of London session to the midpoint of like New York session around 3. Generally speaking, where I've seen it happen, I've even seen it happen during London sessions. But generally speaking, around that kind of New York Open, anyway, you never really want to get in straight away, regardless of whether you've had a Judas swing or not. But New York will, generally speaking, have a Judas move where it moves in the opposite direction of where it wants to go. It's a clue. Remember, it's not a fact. It's a clue. Because institutions need liquidity to enter. Now, I said already they've got liquidity over here, but that's not sometimes enough. So we wait, okay, for that Judas swing. Then, like I said, Judas swing is not a fact, it's a clue. So that means we need a confirmation to turn it from a clue to a fact, or a clue to a high probability outcome. What is the confirmation? The confirmation is, guess what? We have another range. That range is the London high and the London low. So we're now waiting for the New York session. We can get rid of this for now. We're waiting for the New York session to either break the London high and hold above it. So acceptance. Break below it and hold below it. Acceptance. And then we enter in after we see that now goes into our entry model. But before I transition into the entry model, the last thing we look for is after Judas swing, let's say the Judas swing pushes up, doesn't break these highs, or maybe it does, takes its liquidity, and then comes back within the range. We'll start looking for potential sells towards this. We'll say, okay, this is now the external liquidity that price is targeting. So once we have acceptance, we then get into an entry model. What is our entry model? Entry model is, it needs acceptance. It needs to have a destination. So once we have acceptance, we can now say, okay, this is our target. This is our target. So let's say we have this is our target, right? This is a continuation model because we've been in downtrend from Tokyo to London, and we're saying that New York is going to carry that over to this. So we determine that this is the low. How do we determine which one we enter? Right. Well, what do we determine? First of all, we've determined direction. Acceptance. Acceptance is where we hold below or above. So we'll be waiting for price to come below this London low right here and accept it, which means that price stays below for like at least 10-20 minutes. Once price stays below, we then look for displacement, which is 3 big body candles to the downside. And then we look at that imbalance. We wait for price to come back to that imbalance, and that is our entry. And we sell that to the low with our stop loss above the fair value gap or whatever point of interest that we use. And then we enter in with confidence, and that is our trade. So you can see there's a lot of steps, but when you break it down into determining a direction model, which is determining where price is going to go, and then determining how we enter our model. Now that direction model and entry model can change. It can slightly alter, but generally speaking, this is the basics. This is the base. There's a bit more complicated things which you can get into where you can get in a little bit earlier. We don't need acceptance, or you see acceptance in a different light. Like it's not just staying below a level. You can see it as a once it's done something to liquidity, but you can mix and match. But this is the basics of our entry and what we're going to run with until we continue to learn, right? So that's generally what we're going to be looking for, right? So we can do the same for GU and gold, which should take us to maximum 1 p.m. And then I'm going to take a little break. I might go, what might I do? Loki might go and get some food, something like this, and I'll meet myself up. But that's generally what we're going to be waiting for. So let's have a look at some gold, right? So Tokyo session has given us this range. I wouldn't say it's a liquidity sweep. We're taking some people out, but I wouldn't say it's a liquidity sweep. I'd say it's equal highs right here. Price came back down below, and we are kind of just we're in the same range. So this is purely us going to be waiting for like the New York session to make a move. Well, in the meantime, we're going to just mark off some external liquidity. This is the weekly high, the weekly low. This is the daily high. The daily low. Okay. If we have any 4-hour swings, we're good with this. Okay, so our target is going to be this daily high or this daily low. We'll wait for the London session over here to see what it does. We do have some internal liquidity, so let's mark that off. This is over here, and then we have some more. Yeah. Cool. So this is our range. So we're gonna wait for New York session to superside, and then have acceptance towards the other side, which is us assuming that the first choice is going to be a Judah swing, and then from there we can go on to then determine whether or not we believe that price will make that other side the external liquidity or destination rather. This is gold analyzed again. It's waiting for 130 mark. Let's have a look at GU. So again, we're gonna start from the weekly. Weekly highs over here. To be fair though, that is a little bit unfair. That's the weekly swing high, not the weekly high. Change it up. It's a bit too much. So I just what happened? I don't think I saved it. Okay, there we go. We'll look at GU. do the swing though, taking out this liquidity. If we get displacement to the other side, I might be very interested in taking that. My current gut feeling, taking out this liquidity and then targeting here. Gold. Something similar. GU. Okay, we haven't done GU yet. The weekly swing highs over here. Weekly swing lows over here. Actual weekly highs here. Daily high yesterday. Yeah. Daily low yesterday. Yeah. Hour swing highs. Nothing crazy. Cool. Took a session. Got swept. We had acceptance above this as well. We have SMT divergence almost. Because on this account, on this pair rather, swept and we've had acceptance above the Tokyo session. Here we swept. We had a thingy up below. The New York breaks the London high and stays above it. We might actually not be going up. I mean down. The GU, I'm looking at it and let's see. This could actually have a continuation, but we'll see. Like it's still early. So all right. So yeah, this is gonna be us. We're gonna just wait now. I'm gonna mute my mic. If you have any questions, just let me know. And yeah, we'll just leave it like that for now. 1, 2, 1, 2. All right. So we're at an important interval. As you may have been noticing, I've just been playing around with some buys and sells and different ideas. We yet to execute a proper trade. So give me a second. Can I go with that? I was waiting for this blue candle to try and reclaim London lows, but we're currently holding below these London lows here. Gold is moving up slightly. G is also following EU despite it not reclaiming or sweeping London highs, meaning that it can go either way. I think there's still a lot of potential in this market, especially because we do have some news for USD at 7 p.m. So I think we're gonna have a bit of a later move than normal. The only thing is that I don't have an entry. Like as much as I predicted this to go down initially, I don't have an entry. There was no pullback at any point in time, so I cannot get in based on my entry model. So that's kind of the position I'm in and kind of stuck in, which is a bit unfortunate because this was a very nice move. So let's say we got in somehow here, really be up 1 to 3. But like I said, it's not our strategy. So we're currently still waiting for pullbacks. But right now we're looking for acceptance. We've accepted that we are dropping based on the fact we swept these highs from London and we displaced downwards, which is obviously acceptance, considering the fact that this is multiple candles and it's been a multiple amount of time that we've stayed here. So we aren't going up as of now. But this sweep here could be a Judas. This whole move could be a Judas move if we reclaim London lows. Then we could potentially even start looking for buys towards the daily highs as well, which lines up with the goals initial movement. So right now we're not aligned. So someone is lying, at least two people are lying, or maybe everyone's lying. Who knows? But my point is that I'm looking for where that gap is. So give me a second to just like study the markets a little bit. Hold on. I'm actually looking at some gold cells. There's an order block over here. This gold has come into contact with. I really do think USD is bullish. We're not entering anything here. We're just looking. We want acceptance from GU below this range here. Yeah, it's such an important place we're in right now. Yeah. Looking at this, I can't lie. Can't enter this. I like this, you know. Entering gold. 125. I see, I see. Mm-hmm. Okay, so for gold entries, we're gonna wait for it to reclaim London, retest this, and then we can enter like that. EU, we are waiting for a pullback into an efficiency, which EU waiting for more acceptance. Do, 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 do. Efficiency here. Can you come to my entry? Please. That come to my entry, please. I want to get into the market, but you're so far. Gosh, it's been such a banger too. My goodness, so greedy. Ale. We're not getting it. I did enter some gold trades. Bad analysis. I was trying to be a bit too clever, but the reason why it didn't work is because gold doesn't move the same as currencies. It's currently lagging it because it's based off of sentiment, other news, not just pricing. So Forex pairs move differently to gold. So I can't use Forex pairs as an indicator for gold. That's what I was trying to do, which maybe caused this little leg here. But behavior of gold can a lot of times lag, meaning that it would trap those sellers and then make the move. But the only way I would enter is if I get gold acceptance. So I shouldn't use, because I was kind of looking at SMT as a kind of vibes, but it's not really SMT. Okay, GU has acceptance below these lows as well now. Need to make sure that's clear because, like, saying it's external liquidity. But oh, oops. Okay, that's been swept. Wait, how is it not? Okay, that's been swept now. Literally, all we need is a pull back into an inefficiency. Pull back into an inefficiency. The highest or the cleanest, closest one is here. Everything else is not inefficiency, so we have to. Dude, it's 220, dude. Come on. Paying the trading. It's not about the trade you enter, it's about the trade you don't. Mm-mm-mm. Hey, boys, give me a second. Un momento, por favor. Yeah, it's not going to be a lineup. Timber Sliwa, Gabriel Hincapié, that's fine. Eze, Rice Subimendi. Mm, actually, might be lucky. This I could start in that 10 though. Oh, yo. Oh, yo. This is the most painful trading day of my life. What is happening? There's no pullbacks. Okay, I guess could you argue this be an efficiency? I'm gonna get to the extended liquidity before I even get a chance to, bro. I can't believe this, bro. Yo, yo, like, dude. I was willing to get up in from up here. Well, I wanted literally the first one I drew was this. Imagine. Let's say we got in here, right? Like, maybe like a couple of pips above. Spread reasons. No, no, no. He don't understand. He don't understand. Oh my gosh. Oh, we would have made so much money. Ba-da-bam-bam-bam-bam. We're good though. I'm more happy that the strategy is working than I don't know. I think gold might be a good option. Like eventually. Okay, we have a what's this 5 minute minimum for my inefficiency has to be 5 minute time frame. Hmm. There could be an efficiency here. Maybe get like a little pullback. Where this candle closes. Also, I don't like. So we need the middle line, low key. Like meta dash. We have a lighter dash for now. Make it this for now. Yeah. This is just me being desperate to get in, so could easily continue up. We shall see. Was that inefficiency? And here goes this efficiency. Just watching other people make money is basically what I'm doing right now. Can you imagine? I'm watching other people make money. But because there's only people like everything, man. We had everything. We had the sweep, the breaker structure, the inefficiency. What we did was a pullback, and we would have got in, bam, 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 wrist as much as with the wrist, bam. We go all the way down here to get 1 to 11, which would have been so much money, so much money. Ah. Training is not for the weak, man. This is why I don't recommend this industry because you yeah, man, it's crazy. But we're building discipline. That's what matters. It is an efficiency here, so in theory we can enter this. I don't mind it coming up here for real, and then could all make money towards the downside. Hmm. More like in the lineup of EU, but technically it's an entry. Have a look at it on in the trader. It was saying that over 354. Yeah. Yeah, we're gonna enter. I mean, we're not risking as much. So close to my stop loss, but we're in. Oh, it's dropping. I looked to the left just to put it in the Telegram group chat. What is that? That's like, oops. What's this here? I mean, TP is 3,496. Okay. I'm not that fully confident in it, but I'm in it. Like it obeys our rules. Like it's an inefficiency. I mean, like yeah. Let's see. It is what it is. It could either drop instantaneously or continue up. Continues up, we have a cleaner entry up here. If it doesn't, we are, I guess, involved in the take profit. The 1 to 16. Let's see how this one does. Okay, I'm actually gonna end stream here. I think this is our entry, and I like to stream until I enter a trade. We got in before 3 o'clock. Magical hours between 2 and 3. It's our golden zone. Camera coming soon. It's not my priority right now, just because you can hear me, and I don't want to have to always like I'm not dressed up right now. Even I'm going to record videos later on. At least I'm quite comfortable, so I'll probably start dressing or camera. Maybe let's say next week. Goes like next week because we still have to order some parts. Cool. Anyway, it's me, your boy CJ. Appreciate you guys again for tuning in. For those that watch it back again, shout out to you. This is the trade we entered. Let's see what happens. On my Telegram, you'll be able to see what the aftermath is. I will just simply, like you see, I put it in my Telegram here. We'll join the Telegram. It's free to join. It's just me documenting the trades I take and how I'm feeling and all this types of stuff. But not so much feelings, but more so just how the trade is doing. So I'm going to put that in the chat now. Okay, and let me put, excuse me, let me pin that. Right, I pinned it. So if you want to have a look at it, I'm going to end the stream. You can see how the trade does, and I'll update the percentage win. But right now, the trade does look very good. As you can see, we're dropping literally right away. And yeah, we're up a decent amount. And I will catch you guys in another video. So, or tomorrow, actually, tomorrow morning. My mom's birthday, my cousin's birthday tomorrow. They, funny enough, have the same birthday. He's my mom's nephew, I guess, or niece. Nephew, sorry. And yeah, we'll be celebrating in the evening. So I don't know when I'll be live. I'll definitely be live. It just may not be until I enter a trade. Maybe just a cut short type of trade. What I'm gonna do, I've set my stop loss, I've set my TP. I'm gonna close my phone, close my IC markets, close all of these tabs, and then I'm gonna literally could technically set alerts, but I'm gonna leave it for now. And then yeah, we just wait and see. Thank you guys once again. It's been your boy CJ in a bit. Peace.